Welcome to the Reserve Bank, and thank you for your interest in the Reserve Bank. I'd like to take the opportunity today to welcome the conclusions of the review into the RBA and to thank the review panel for their thorough and their excellent work. The review's been timely, with the RBA facing an increasingly complex world and a complex operating environment. The recommendations in the review will help us deal with this more complex world, and they will strengthen the monetary policy process and the governance of the RBA. The review concludes that the RBA has a strong reputation both domestically and internationally. It also concludes that we have played an important role in the economic success that Australia has enjoyed over recent decades. And the panel also notes that the RBA has a highly dedicated and a highly professional staff who are very much focused on serving the public interest. But as times change, we need to change too. And the review will help us do this as the bank and its staff strive to promote the collective economic welfare of the Australian people. I'd particularly like to welcome the panel's support of the current monetary policy arrangements in Australia. Australia was an early adopter of flexible inflation targeting, and this approach has served the country well, and the review panel has concluded that as well. The 2 to 3% target range is well understood in the community, and it helps anchor inflation expectations. And the flexible nature of the inflation target is also important, and the panel has some helpful suggestions as to how the Reserve Bank can be clear about how and when the flexibility is used. I think that's helpful. I would also like to welcome the support for the operational independence of the bank. This is one of the cornerstones of our monetary policy framework, and it's pleasing to see the strong endorsement of the independence of the bank and the suggestions for improving it. It's also pleasing to see the support for the Council of Financial Regulators and the ideas for improving the current arrangements. And I also welcome the explicit recognition in legislation of the bank's long-standing responsibility for financial stability. As you will have heard the Treasurer say just a few minutes ago, a major change recommended by the panel is the establishment of separate boards for monetary policy and governance of the bank. I have thought for some time that there was a strong case to strengthen the governance of the RBA as an institution. The RBA is responsible for many nationally important functions in addition to monetary policy. These include being the banker to the government, we're the operator of critically important national payments infrastructure, we're the printer of the country's banknotes and passports, and we manage Australia's foreign exchange reserves. We have a large technology footprint. So there's a lot more going on in this building than just monetary policy. Under the Reserve Bank Act, I, as the Governor, am charged with managing the bank. And I'm also the accountable authority under the Public Governance Performance and Accountability Act. As you know, there's a great deal of scrutiny and public visibility and commentary about our monetary policy decisions. But there is much less oversight of how I discharge my responsibilities to manage the RBA. I think it's true to say that from a number of perspectives, the current oversight arrangements of me as the Governor for managing the bank fall short of contemporary standards. So the proposed changes would help address this, and they would help me as Governor manage the bank and the many complex and important functions we undertake. So I support that change. The recommended changes would also strengthen the monetary policy process by having a board whose sole focus is monetary policy. I very much welcome the conclusion that the board should include people with diverse perspectives and knowledge and who have experience in decision-making under uncertainty. And I very much welcome the appointment today by the Treasurer of Ian Ross and Alana Rubin as board members of the RBA. And it's also pleasing to see that the panel recommended the Treasury Secretary remains on the board. This is unusual by international standards, but I see a lot of advantages in that. The establishments of these two boards will require changes to the Reserve Bank Act, and that's ultimately a matter for the Australian Government and the Parliament. And you would have already heard the Treasurer this morning say he intends to proceed with these changes, and the bank will work constructively with the Government and the Parliament with the aim of ensuring that any changes to the legislation are effective in achieving the objectives. The review also recommends that the statement on the conduct of monetary policy be updated. This is important because the statement sets out the common understanding between the Government and the RBA on monetary policy. The review sets out a number of issues that could be covered in this statement, and the suggestions make sense to us and they have our support. And the board will work constructively with the Treasurer to finalise a new statement, hopefully by the end of this year. The review also includes a number of recommendations for how the board works, including the frequency of meetings and our approach to communication. It recommends that the board receive and consider a richer set of briefing materials, including on economic modelling, research and monetary policy strategy. It also recommends closer interactions between the board members and the bank staff in the expectation that this will support a stronger culture of challenge and debate within the RBA. These are important recommendations and the board will consider them over its coming meetings. It will develop a holistic response, given that many of the recommendations in this area are interrelated and they will have flow-on effects for how we do our work and how parts of the bank are structured. And we will publish a detailed response later this year after we've done the necessary work in these areas. The review also includes a number of recommendations to strengthen the bank's management, culture and operations. These include the appointment of a Chief Operating Officer, enhancing our communications function, encouraging a culture of debate within the RBA, strengthen the role of research and continue to invest in the leadership and management capabilities of our staff. These recommendations make sense to me and they have our support. And we will now develop an implementation plan under the leadership of a small group of experienced people. To conclude, I would again like to thank the review panel for their work. It's not often that a central bank gets reviewed, so it's important that the job is done well and it's done thoughtfully and that the process is constructive. And this is exactly what's happened here. It's been a good process. It also makes sense, as the panel recommends, for regular reviews to be conducted, and the panel recommends that reviews get conducted every 5 years, and that has our support as well. As the panel notes, the review has been about strengthening a well-functioning institution and ensuring the bank is in a good position to meet the challenges of the future. Monetary policy and operating the bank has become more complex, and the recommended changes in the review will help us deal with this changing world, and they're consistent with our internal staff values of serving the public interest and achieving excellence. And I look forward to working with the government, the parliament, the board and the bank staff on how we can best live up to those important values in the interests of all Australians. Thank you very much for your interest, and I'm happy to answer your questions.
Thank you. Eric Johnston with The Australian. One of the recommendations was about the elevation of full employment and price stability. So both of them should have equal weighting in the thinking about interest rate decisions. Are those two areas? Could you help me understand? Don't they pull in different directions at times?
The proposal is that the objectives of the bank get narrowed to price stability and full employment, and the welfare of the people, which is the third current objective, that becomes an overarching purpose of the bank rather than an explicit objective. So the objectives will be price stability and full employment. And I don't see those two things in conflict, because you can't have full employment if you don't have price stability. At the moment, we're trying to generate a return of inflation of 2 to 3%. And the ultimate objective there is to make sure that people have jobs and the country can operate close to full employment. So those two things are not in conflict. In the short run, there's a trade-off, obviously, but in the long run, they're perfectly consistent. And the weighting that's given to each of them in decision-making is something that we can't determine from meeting to meeting, but they're not inconsistent with one another.
Philip Lowe, thank you for your comments. Alicia Barry from the ABC. The Treasurer, Jim Chalmers, said just an hour or so ago that he would be looking at the RBA Governor's position in the middle of the year. Your term ends in September, the current term. Are you hopeful or expecting another term?
Well, it's a great honour and it's a great privilege to have the job that I have, and I would say it's also a great responsibility. It's entirely up to the government whether I continue to serve in this role after September. If I was asked to continue, I would. If I'm not asked to continue, I'll find another way to contribute to Australian society.
Thank you.
Governor, could I just ask you about this? Sorry, Ross Greenwood from Sky News. Can I just ask you about the issue of full employment? If it is to be one of the hallmarks, you have actually changed your definition of full employment in the past as the unemployment rate has fallen. So just as we have a price target, an inflation target of 2 to 3%, would it also make sense to have an employment target so that we know what full employment actually looks like in Australia? Because it seems over time that it has changed. Should it be 3.5% to 4.5%, something of that nature?
The first point is that the objectives of the bank aren't going to change here. They're going to be price stability and full employment, and that's been the case since 1959. So the objectives of the bank aren't going to change. What we're talking about here is the statement on the conduct of monetary policy, which is the agreement between the bank and the Treasurer. So there'll be more fulsome language about how we think about the short-term trade-offs, but also the long-term consistency. So the objectives aren't changing. The narrower question is, should we specify what full employment is?
That's what I'm actually
And
asking.
I heard the Treasurer respond to that question half an hour ago, and he said, if you ask 10 economists, you'll get 10 different answers. But our current assessment is that full employment in Australia is probably an unemployment rate in the low fours. We've got to take account of underemployment as well, which fits into the definition. Given it changes so much over time, I don't think it makes sense to be prescriptive about what constitutes full employment. That's in contrast to being prescriptive about the inflation rate we're trying to achieve, because that being prescriptive about the inflation target provides a really strong term nominal anchor for people when they're making their decisions. So I think they're quite different.
Governor Naveen Razik from SBS News. The review raises several points about communication. I mean, there's a view among experts that this place has been a closed shop for far too long. Transparency around decision-making has been lacking. So when will those changes around transparency come into effect? And can we expect to see you more speaking to us in front of the media, in front of the cameras, speaking to the media more often, going from that next rate decision in a few weeks' time?
Whether you see me more often, I don't know, because I'm already in front of these cameras a lot. So we may consider how that's best done. The recommendation is that I do a press conference like this after each Monetary Policy Board meeting. I can understand why the panel recommended that, so that makes sense. We have to work out how that fits in with the meeting schedule and the other communications. So whether you hear from me more or not, I'm not sure, but the format might be different.
Do you accept, though, that there has been some communication that's been open to misinterpretation, particularly the guidance around those rate rises not coming into effect to 2024? That was raised as a key issue.
It has been an issue, and we've responded to it publicly a number of times. We put out a review of our approach to forward guidance, and that has a number of lessons, and we've learnt those, and we've heard the recommendations of the panel. I understand where they're coming from, and we will respond to that, but we will respond holistically in terms of the number of meetings, the structure of the meetings, how the other board members speak in public as well, because at the moment the way the board operates is that they've appointed me as their spokesperson for monetary policy, and the review panel is recommending that the board members also speak on the economy and monetary policy, at least some occasions. And if the board decides that would have my strong support as well.
Governor, Liam Tapper from 7 News, thank you for your time today. You've faced a lot of personal pressure on these rate rise decisions. Do you think the move to split the board, do you think that would hopefully place less pressure on whoever is the next governor, be it yourself or be it someone else come September?
No, I don't think the splitting of the boards is going to affect that at all. The splitting of the boards is about making sure there's good oversight of the way I manage the bank, and then having this separate people whose sole job is monetary policy. The review panel also suggests that the statement on after each board meeting is a statement from the board rather than me personally. So after each board meeting, I put out a statement in my name, and you all report that Philip Lowe said, that Philip Lowe did this. So the reporting, I hope, will be slightly different if you're saying the board says this, the board says that. So I think that's a constructive change and would reduce the focus on me as an individual, because I'm just one individual here, and we've got 9 people taking these decisions.
Okay, I think we're going to take some questions from online now. The first one is Peter Ryan from the ABC.
Yes, Governor, thanks for the question. Just looking back at that 2024 rate signal, which was seen as forward guidance, do you think the criticism that you've received in the review is fair given the circumstances you're looking at? Back then at the height of the pandemic, when I recall you were saying you were wanting to offer as much comfort and to ease anxiety. Do you feel, I suppose, in any way personally slighted by that criticism?
I don't think the panel is criticising us for that, and I don't feel personally slighted. As I've said on other occasions, our approach during the pandemic was to do every single thing we could do to help Australia. We were facing dire circumstances. Remember, we were locked down, and it was projected that the economy would be weak for a long period of time. So we had a really strong insurance mindset. We wanted to do everything we could, and it turned out we did too much. And certainly with the benefit of hindsight, you look at it and say, well, you shouldn't have done that. And I accept that criticism. But what I try and explain to people is the situation was dire, and the meetings we had in the room next door were saying, well, we don't want to leave any stone unturned in protecting and ensuring the Australian economy. That's what we did. Turned out we rebounded from the pandemic bit quicker than anyone expected, and we had to wind back. And people borrowed during the years when interest rates are very low and are now unhappy as interest rates are going up. And I understand that. And we've learned some lessons about how to communicate as in response to that.
The next question is from Shane Wright from The Age.
Governor, thanks for your time. I want to go specifically to recommendation 2.2, where under the new statement of monetary policy, your regular communication, the bank explains how long inflation is expected to be away from the midpoint of target and why, how long away on labour market. I'm wondering, do you envisage that as a time-bound sort of description, a condition-bound condition, and how regularly you would communicate that, and in what way you would communicate this sort of focus on achieving the dual mandate of the bank?
Well, thank you. It's a good question, and we're going to have to work through that at the board. I really see it as really an elaboration of what we're already doing. At the press club a couple of weeks ago, I said that we're expecting to get inflation back to the top of the target band by the mid-2025. And I talked about the possibility of doing it, getting inflation back to the target band earlier than that, and the consequences of that and the trade-offs that the bank has, the board has been considering. So what I imagine will happen if we develop this recommendation is we'll do more communication along those lines. So it's not a fundamental change from what we're currently doing. It's really, I'd say, an enhancement and elaboration of the current approach, because we're already doing this.
The next question is from Michael Reid from the Australian Financial Review.
Thanks, Governor. You previously defended the makeup of the board. Do you agree with the findings of the review that the board is in fact lacking in the knowledge required to both challenge you and set monetary policy?
Yeah, I hear that in the review. I think one observation I'd make through the review process, which I said was kind of excellent, is that the review panel did not sit in the boardroom. And the description of how the board process works and the challenge in the boardroom that the panel has doesn't particularly resonate with me. In the boardroom right next door, what I see are 9 people who are deeply engaged in the questions, who bring a great deal of expertise to the issues we're dealing with. They're probing, they challenge me, and sometimes I speak last in the meeting. So the idea that the board members sit there meekly and accept the recommendation that I put to them is very far from the reality that I've lived as the governor. So that part of the review discussion didn't really resonate with me. But I do hear them, and they say, well, they would like to see more monetary policy and financial expertise on the board. And I understand why they're saying that. But I think that I find that part of the review discussion and not quite lining up with the reality that I know. So I've defended the process in the past. We've got 9 people making those decisions. They do it very diligently and have expertise, but that's not to say we couldn't have a different structure that would help. But I've defended the board in the past because I think it's worked very effectively, and people take their jobs incredibly seriously.
The next question is from Ian Rogers from Banking Day.
Today, I've got a technocratic one for you. The power to direct the lending policy of banks, has that ever been used? And would you ever consider employing that in future?
Perhaps I'm not sure. Perhaps kind of in the depths of history, it was used when we used to operate monetary policy by quantity targets. But since we've had kind of a modern setup, that's never been used, and I could never imagine it being used. I really think it's a relic from a previous generation, and it's part of good housekeeping to remove those relics from legislation. So I have no anticipation that we would ever use that, and I support its removal.
The next question is from Patrick Commons from The Australian.
Oh, thanks very much, Dr. Lowe. My question, I mean, you talked about how that section of the review didn't really resonate with you, the description of the board process and coming to decisions around interest rates. So can you tell us how will monetary policy decisions be improved by having a separate monetary policy board with more experts on it?
Well, the board will have a sole focus on monetary policy. At the moment, it has some limited governance oversight as well, but so its sole focus will be monetary policy. But the other the other set of changes that I recommend in the review is that the bank change internally the type of material it gives to the board. It's recommending that we give to them more analysis, more research, more detailed, and we engage the board more fully in kind of the underpinnings of the kind of the analysis and the forecast that we present to them. So I imagine when we give effect to that, our board meetings will be longer, and the board members will have to spend more time here, and they'll engage with the staff. So that process, I think, will help. So it's not changing the kind of having these 2 separate boards or even changing personnel of the board. It's a richer interaction between the board and the bank staff. I think will help both the staff and the board.
The next question is from Michael Heath from Bloomberg News.
Hello, Governor. This is Swati. My question is on the communication part of it, and there's given that the RBA board members will now be doing more public engagement, and I just wonder if you're worried about too much noise that will come on monetary policy with so many people talking and giving their views and opinions as well.
Well, you can communicate too little, but you can also communicate too much. And I've been very conscious of this while I've been the governor, that I give a public speech once a month, and kind of more than that is probably too much. In some other countries, you've got a lot of people speaking about monetary policy, and that adds to noise. So we're going to have to work out a way to have more people speak, and to do it in a consistent way which doesn't create noise. So that's one of the issues we're going to have to work through. But you're right, in principle, you can't communicate too much, but you can communicate too little as well. So our job here now is to find the right balance.
Next question is from Adrian Lowe from the West Australian.
Hi, Governor. Thanks very much for taking a question. You've previously stated several times one of the strengths of the RBA in its current format is the frequency of its board meetings, having 11, and means you can quickly respond to issues as they come up. Do you think changing that to 8 for the Monetary Policy Committee, as recommended by the review, reduces that strength?
We'll have to work through that. I've valued meeting 11 times a year, and I've spoken of the benefits of those you just said. But other central banks around the world meet 8 times a year, and they seem to manage. So there's a trade-off there. the frequency of meetings and the responsiveness that we can have with monetary policy. The other consideration that feeds into here is communication, because if we were to have 11 meetings a year and I did a press conference after every meeting, plus 5 appearances before Parliament, plus speeches in kind of at public gatherings, I think we would be in the world of too much communication. So we've got to get the right balance here. 8 works in other countries. It could work here, and the board's going to have a discussion over coming meetings about whether it wants to move away from the first Tuesday of every month, except for January, which is well established and understood, but you might have to get used to a different rhythm.
The next question is from Chloe Burras from Network 10.
Thank you, Governor. You said you didn't take this personally, but the review specifically delved into the RBA's performance since 2016, the year you were appointed Governor. How can you not take this personally?
I don't take this personally because I'm just one person on a board of 9 and a staff of 1,500. And I know when I'm with the board and with the staff how dedicated we are to doing the right thing in the public interest. We don't always get it right, but we always try and do the right thing by the Australian people. And I take great comfort from that. I also take comfort from the fact that the errors that we've made are really obvious, are really clear in other countries as well. And before the pandemic, inflation was low everywhere, not just Australia. Every country had a difficult period during the pandemic and responded really similarly with monetary policy. And now every country has got high inflation. So while there's a lot of kind of focus on us making decisions, we're really making decisions in a global context, and everyone is dealing with the same issues. So when I talk with the other central bank governors, we've got the same issues and we've dealt with the same problems. So I don't take it personally because I'm just one person in an institution that every single day tries to do the best job for Australians. We don't always get it right, but we always try to get it right.
One last question from the phones from Glenda Corporal from The Australian.
Hi, can you hear me?
Yes.
Okay, thank you very much. I wonder, after 7 years of being governor, you can, and having been in that role through some pretty sort of rocky times with COVID and inflation rebounding, could you reflect on the role or the potential of monetary policy? I mean, this committee is talking about not only 2 to 3%, but maybe even trying to get it exactly in the middle. And yet, as everyone knows, you don't control fiscal policy, you don't control global pandemics or whether one country invades another country. There's a whole lot of structural issues in the economy domestically and globally, which affect the role of inflation. And yet the RBA is expected to, deliver within 2 to 3% and maybe around 2.5%, and if not, explain why. And I just wonder whether monetary policy, the capacity is overestimated, and the report, in fact, emphasises the capacity of monetary policy, but whether in a real world, in a very global world with major changes, you can really deliver on a very accurate, pinpointed monetary policy target.
Well, that's exactly the reason why we have a flexible inflation target. You might remember when inflation targets were first being put in place, they were kind of 2 to 4. I used to call them electric fences. So if you ever hit the boundary, you were supposed to have a nasty shock. We never bought into that model. We said what's important is that we provide a strong nominal anchor for the community, that over long periods of time, inflation will kind of average 2 point something. So that's the nominal anchor that we want to provide. And we recognise, because of the factors you were talking about, that inflation from time to time is going to move outside that target range. And at the moment, we're experiencing one of those times. But I do think we can deliver over time an average inflation rate of 2 point something. We have the tools to do that, but we do have to accept that there's going to be variation in it. And this is the biggest variation we've had in 30 years, but we will return to 2 to 3%. We have the tools to do that, and that's our mandate, and that's what we're set about doing. The review panel also recommends that, as part of the statement on the conduct of monetary policy, there's some discussion of the interaction of fiscal and monetary policy, and I'd very much welcome that as well, so that both the government understands what we're doing and we understand what the government's doing, and in some cases, respecting the independence of both the government and the RBA, we might be able to come up with a better solution.
Alicia, question?
Governor, I'm just wondering, is there a risk that the Monetary Policy Board could be stacked with academic economists, which may result in more groupthink and lose further touch with the real world facts and result in worse outcomes for the general population, the Australians that you're trying to do the best for?
Yeah. Well, I'm not sure I accept the premise that if it was academics we'd get worse outcomes, but to go to the substance, I think the risk of that is low, because the review panel recommends that the board be diverse and people from a broad range of experience. It explicitly says it's not recommending an academic panel. It also recommends that appointments to the board come from a list that Stephen Kenny, the Treasury Secretary, and I maintain, and a third person. And when we are constructing the list, and the two appointments today come from that list, we're looking at the metrics of skills we need. So given that structure, I think the risk that you're talking about is low.
I think just two more questions from Ross and Eric.
Governor, you've expressed your desire to continue in this job beyond September. But given the fact that the review, which is endorsed by the Treasurer, recommends significant change culturally, in terms of personnel, in terms of being open to criticism, in terms of having greater communication, why is it that, given you are currently the Reserve Bank Governor of the Reserve Bank as it currently is, why are you confident that you are the right governor going forward beyond September?
And that's not the judgment for me to make. All I said was that if I was asked to stay, then I would. It's an important, responsible, honourable job. So if the government would like me to stay, then I'm happy to stay. But if they want to have somebody else for the reasons you're articulating, I'd perfectly understand that and have other things to do with my life. So I'm not kind of making a pitch. I'm just saying, look, if they want me to stay, then I'm happy to do it. But if they want somebody else,
then I'll add one last thing. Are you confident that you could drive the changes to the Reserve Bank as outlined in this review?
Well, I'm certainly confident I would do my best, and it's up to others to judge whether that's good enough.
Thanks. This is probably risky because it's a hypothetical, but if we adopted all the recommendations of the review, do you think we'd still be in the same place where the economy is today with high inflation and so on, if these recommendations came out a little while earlier?
Well, it's hypothetical. I would observe that most countries are in the same place. I've just been in Washington. We had meetings at the G20 and with the central bank governors, and we're all dealing with exactly the same things. And through my period of governorship, we've all been dealing with exactly the same things. Inflation being too low, kind of doing too much during the pandemic, wondering how that was going to work out in our high inflation. So I think that's the reality. We're all the advanced economies are dealing with exactly the same things. And no matter what structure you have at the central bank, you have to deal with those things. And I think it's not correct to say that a different decision-making structure would make fundamentally different outcomes in these areas. We're really talking about improvements at the margin, because most of the issues we're dealing with are driven by global developments. And no matter what structure you have at your central bank, you're dealing with the same issues. So, I think the changes are positive, but I wouldn't overestimate that they will fundamentally change how the economy works. We're not suddenly going to be delivered 2.5% inflation every year. So it's an improvement, but we've got to be realistic here.
That brings us to the end of the media conference. Thank you for attending.
Thank you very much. Thanks for your interest.